Hey, how's it going, guys? Mark here with another video. Today I want to have a daily portfolio update. Today's Monday. Today we're down $1,154.73. That's about 3.1% as of today. So we started off today probably at, what did we start off at? Pre-market we were down. Yeah, as of today it was just pretty much an overall down day. Basically because the entire market is kind of having fears of another second wave of the thing that's going on right now in the world, and kind of thinking that there might be another lockdown, and there's fears of that, which is kind of making the market go down, which, I mean, in reality, we're having that on top of waiting on stimulus package news, on top of the overall volatility leading up to the U.S. presidential election, which is pretty crazy. It's kind of a storm to have a very volatile month here. Right now, I have my two SPY 500 calls open, one that's closing in a couple days, which I'm pretty reluctant to say that it's down to about 52 cents a share. And last week, we peaked out at it was about $3 per share, which was really nice. But, well, we had a big red day today, so it is what it is. I really believe, though, that we'll have a chance at having a little bit of a recovery tomorrow, and if not, that's okay. We'll probably be down. The total for this was how much? $943. We're down but $891, which is pretty brutal, but at the same time, I'm okay with this loss. I think I'll make up for it on my November call, which right now we're sitting at 611. I believe my overall buy-in was like 1837. So yeah, I really believe that this is going to pop back up towards the end of November. And if it doesn't, well, that's what you get for options trading, I guess. That's what happens when you get greedy and you think that you can time the markets. That's why I also want to talk about how overall, it's better to be in the markets for a longer period of time than it is to try to time the markets, because overall, when you dollar cost average into specific companies, as well as even like ETFs like the S&P 500, which is basically an ETF is basically a fund that monitors the top 500 companies in the stock market. That's the S&P 500. But as long as if you're in the market for a long period of time, you're dollar cost averaging, and you're much more likely to be making money than to be options trading. Options trading is by far the most risky thing. But yeah, so overall today we're down $1,100. Over the past week, we're down $1,400. And over the past month, we're up a little bit, about $881.50, 2.5% up over the past month. The past 3 months, we're up about $3,500. Past year, up $7,700, and overall we're up about $7,300, which is really nice. Basically, all that was due to Tesla and buying in at the correct time. But I love Tesla. It's a beautiful company. But yeah, speaking of Tesla, let's take a dive into that. Let's look at the Tesla stock for today. So today we opened up at let's see, what did we open up at? At about 9 o'clock, we opened up at $444. And we kind of were consolidating for a while here at the 441, 439 mark for the majority of the day. I mean, overall today, the market was relatively a sell-off day. It's just really uncertain. And we had a big run-up last week, so I think that the market's just kind of having a small correction. I mean, but if we don't hear news about the stimulus package, I could see that the market might continue to go down. But after we speak about Tesla, I want to take another dive into the S&P 500 chart, which is the overall market, because Tesla, there's an article that says how Tesla underperformed the market today, but in reality, I mean, the overall market was down, so it kind of is what it is. But over the past week, what did we close out at? We closed out at 434, and we're at 433 in the after hours. We're up a little bit. The overall market is just really uncertain right now. We're just waiting and hearing stimulus package news, and waiting to hear if unemployment benefits are going to be extended. But as of right now, I think the market is really going back to its uncertain times. I really thought that leading up to the election, we were going to have a rally because you know, the more the stock market does well, the more of a chance that the president will be reelected. And but I really think that the opposing side is trying to prevent that from happening. So we'll see what happens. We probably won't see a stimulus package leading up until next. Probably after the election. But yeah, let's take another look at the S&P 500 because I want to talk about a pattern that's forming here. Over the past 5 years, starting from here to the end, is starting to be kind of a megaphone pattern. And in this megaphone pattern right here, we could be, for the bear scenario, we could be down to in between the 250 and 218 mark, kind of like at the bottom of the March correction, or I should say the March sell-off. But I really don't believe that that's going to happen. I kind of think we'll break out more towards the upside in the upcoming few months, probably towards the end of probably a few months after the election. I would like to say we'll probably have a breakout or a big consolidation in between, in the middle for a while. But we definitely aren't in an overbought market. People like to think that that's the case, but when you compare it towards like the 2008 housing bubble and the recession, we're not even close to the overbought scenario. So I really like to think that we aren't going to be going down on the bearish side here. And I think that we'll probably have a breakout or we'll consolidate for a few months leading after the election. But yeah, guys, this isn't financial advice. This is for entertainment purposes only. I like to give you guys my 2 cents and my thoughts on different stocks and my portfolio and my strategy. But thanks for watching, guys. See you later. Bye.